Good morning, everyone. This is Brad Matheny. It is bright and early this morning, 4:30 in the morning in California. This is the Plan Your Trade video for the 18th of July. Excuse me, got a little cough this morning. We are looking at a major crush pattern in an inverted counter trend type of mode. Now, a major crush pattern is, not quite similar, but similar in structure to a breakdown or a crush pattern. We don't have major crush patterns all that often. A crush pattern typically is a fairly large downward bar while price has been in an uptrend. A major crush in a counter trend mode is, I would interpret, would want to be a fairly large upward bar as long as price trending is moving downward. Now, I went over this yesterday. The way I look at trending for these patterns is I try to look at the last 3 to 5 days of trending. So let me drag this out of the way, give you an idea of what I really look for. So I will take a look at the last 3 to 5 days. Let's just say it's in this window right here. Okay. And what we're going to look for is average price. You see, we went up, we went down, we went up, we went up a little bit on a down day, up a little bit further, and then down yesterday. It was a big, beautiful downward move. So if I go back 3 days, roughly average these two bars, it's going to put me at a price level right about here. And that means that we're down. I go back about 5 days, that's going to put me at an average price level right about here. And that means that we've moved down. So we're typically in a moderate downward trend. Sorry, move the mouse again. We're typically in a moderate downward trend, indicating that the counter trend crush could very well be an upward bar. Now, the crush pattern itself is indicating a fairly large range, fairly aggressive price move. So generally, you need to understand that a crush pattern is typically a fairly big bar. It's very capable of 1 or 1.5% moves today. Very capable of making that kind of a big range, maybe even 2%. Given where we're at, and given the fact that we're outside of this dotted line channel, and we are trying to move upward within these extended channels, I need you to understand that we're really looking at broader price channels out here with this dashed orange line. These are big, broader channels. Then we have a couple of narrow channels here with the yellow line here and the yellow line here. Very important outer channels. Then I had drawn these flagging formations here and potentially here, indicating that, hey, we may move into this type of flagging before we move out of the range. So really, when you take a look at this, and then we have this narrower dotted line yellow channel here. So it's a lot to look at. I know my charts are a little confusing, and plus I'm drawing all these crazy little things here to try to help people, and I'm going to clear a few of them out as we go. But really, what we're looking for here, and again, I'm going to try to highlight this area again. Major support right here, 555 to 556, let's say. And it's really more like 556 to 557. They're just under 557. Major support right down in this area. Okay. Then we end up having more long-term major support right down in this area. And I updated all of these as of looks like I need to move it. So let me move it a little higher. Got to come up to this level, which would move our support up to here. So right there is our support level. And that again is going to be 548 to 546. Okay, let me check this one, make sure this one, yeah, that one's been moved up to the highest closing price level. So this support level is valid right now. And this gives us an idea of where we want to see price hold up. Now we have go back to 30-minute, because we've seen price roll very hard down yesterday, And because we have these deeper support levels, remember those deeper support levels play a fairly important role. Most importantly, right now, is this support level. This is the most critical support level right now, is right in this area right here, being able to hold this up. Okay. And we can, as I've taught you before, and I will continue to teach you, we can identify very cleanly a level that we need to see price get above in order to map out any type of reversal, any type of confirmed reversal, by simply using a Fibonacci from the roughly the highest closing price down to about the lowest closing price. Now, normally I would pick what I call rejection areas, but I'm just going to pick the lowest closing to highest closing. And we look for the 382 to 50 level right here. And this becomes our line in the sand for price to make a move today. Okay. That is our level that above, let's call it 560 and a half. We are going to be looking at price making a very strong move to the upside. Below 560 and a half, which is below this gap, we are going to be looking at price continuing to potentially move downward. So, really, as I expected, and I'll draw these today, these were my expectations as of yesterday. And I'll get rid of some of these longer term. Well, I'll get rid of this one. And I'll leave this red one for now. Really, depending on how we open and depending on the jobs data news, we have a range in the morning here that is likely to stay fairly open in terms of trying to struggle to get out of this range with the jobs data and everything that's coming this morning. If we are able to move higher from here, then I think we're going to see a move up into this area and then potentially a move up into this area, trying to fill the gap window up here. And that would be our counter trend, major crush pattern in action. That would be the move that I think is probably 70-80% the most highly outcome type of move. If we fail to get any support and come down, we need to watch this level, the 555 level, critically. Now, what could cause the markets to come down like this? Well, there's a lot of news that's out there. We're looking for the major markets to move higher. Like I told you in my other videos, I'm getting very clear signs that, the transportation index and the RSP and IWM are all moving strongly to the upside. To me, that's a sign that we're getting a fairly broad market rally phase setting up. And it could continue on through the rest of the year. So I don't believe that there's much downside here unless there's some crisis type of events setting up in the background, or unless we get very bad jobs data or some news hits. I really do believe that the support level down here, 555, is going to hold. And we're going to see the markets move back up into an upward channel, just like I suggested over the past couple of days, and then move into a deeper consolidation phase. And that's what this level was about that I drew. What happens after we get past this major crush pattern is essentially a very extended kind of flagging for about 3 to 5 days. And then we move into that breakout channel. So, as I showed you with this level here and this level here, is trying to highlight the fact that we're moving into a peak flag, a drop down here into this level, finding support, and then we're going to move into some flagging. So, this would essentially be on a flag formation, your upper move, your downward move, your upper move, and then rolling down here into a lower flagging formation before potentially breaking out to the upside. And that's a very clean A, B, C, D, E pattern breaking out to the upside. So at this point, what I'm expecting, folks, is, we've got news, jobs data. We've got the U.S. leading index coming in just after the market open. We have some Fed comments. I believe that this gap is going to immediately attempted to get filled, probably within the first 4 or 5 hours of the trading day today. I believe that we are going to see a moderate recovery, as I mentioned to you. I think we're going to see general upward trending today. Let me see if I find the other one. I think we're going to see general upward trending today, kind of in this area, maybe extending out a little bit, maybe not as aggressive as I've drawn it, but I think it's going to be a fairly solid fill this gap mode or attempt to fill this gap mode day. And that means that we could be looking at anything up in, this area or this area or this area as a solid upward trend. And remember, from where we closed Friday or yesterday, Wednesday, that's a 0.75% to 1% to 1.25% roughly upward trend before we may run into some resistance right in this area, just at the high of the gap or just below that gap. We could fill it, come up, touch it briefly, and then roll potentially back down. Remember, the next 2-3 days are this consolidated sideways trend. And in general, what we would be looking for is this trending to stay kind of in this lower wedge type formation in this area, tightening and tightening into the flag formation before breaking out. Okay, that's kind of the general structure over the next 4 or 5 days. So, as a trader, we are really, I mean, if you're an aggressive trader, a good move today might be some sort of a straddled type of a options play, potentially a 5 to 7, maybe 10-day option, call option, potentially looking for this resolution to move to the upside over here, and maybe a 2 or 3 day call option just as a short-term play to play this move up higher. And then you may hedge yourself with a 1 or 2 put options down here, hypothetically, just in case the market breaks down today. If it were to break down today and attempt to retest this, I kind of think we'd see this and then come back up and then try to resettle. So the crush itself pattern wouldn't be as prominent today. It may then roll into this move and then consolidate back out, eventually getting out of this move, as I've suspected, to the upside. So a weaker crush pattern would be this type of a move. Okay, this would be a weaker crush pattern setting up this. Well, that's not going to work. Setting up this type of a deeper rotation today. A strong counter trend crush pattern, which is what I expect to see happen, especially after this big volume, would be a very solid move up. It would be more like this to this. Let me find it. So yeah, that's pretty much it. So I'll make this a bright red or a bright yellow. So there's our fairly strong counter trend kind of a crush pattern. Opening in this area, getting above this major resistance area that I'm highlighting, 560. So pretty much a move into 560, 560 and a half to the upside would give me confirmation that price is very strongly attempting to fill this gap. It's trying to get above this level and fill this gap. If it fails to get above this rectangle right here, this right here, that rectangle, then we may just see it waffle around and try to do nothing today. So be aware that, we've got to get above this level and stay above this level. Otherwise, we're looking at a potential breakdown. I think it's fairly safe to say that you're going to try to see a fairly solid recovery to the upside today. Maybe not 563, maybe not 565, but I think we're really easily going to get into 561 and 560 trying to fill this gap or recover back up into this area. We'll see how high it wants to go. Like I said, a major crush pattern can be a very large range bar. Okay, so let's look at the QQQs real quick. And here we are. Boy, what was I drawing on this? Okay, let's get rid of some of these. This was all day yesterday. All day yesterday. Leave that. Get rid of this. And get rid of this. Okay, so here's the cycle patterns I had drawn. Now remember, we're off the cycle patterns here. We're below, but really what we're looking at, ladies and gentlemen, is this to pretty much carry on over here. So you can understand that just imagine this entire window of bars here gets shifted downward into this price area. So it's basically I was off on my where I thought price would end up closing. But as far as the shape of what's taking place in the price, we're right in line. So I'm still expecting that major crush pattern right here to prompt an upward bar. So again, we're going to look here, try to find that gap window filling up in this area, maybe seeing it move up and then stall a bit in the end of the day, maybe even up into this area here. Now, here's our major gap, but let's go ahead and teach you again how to use the Fibonacci. So we're going to go back to the longer term data. Here's our Fibonacci levels. We are at the highest high here. So we need the 382 to 50, which is right here. We then had a more intermediate level, which is from right here. Let's pick this level up to this level. And perfect, that's our 382 to 50 level right here, already being drawn. And remember, all I'm using is the 382 to 50 level to find these resistance and support levels. And then it looks like we have a level here that's being drawn from a deeper level of support down here up to here, which would have to be moved all the way up to this upper level. Try to get it as close as I can. And that makes this 382, whoops, to 50 level active right here. So this then becomes our major support. And that major support then teaches us that we are actively seeking major support right near the lows of yesterday. This is a very solid support level, will likely drive price to move higher. Our short-term support is right here. So if we were to get above this level right here, 492.77, I think that we would try to stall back out in this area and possibly churn a little bit here as we move into this sideways pattern setting up here. So we have very solid support in the QQQs for the major crush pattern back to the upside. And I think we're going to see a pretty solid move. It may be more evident here in the Qs than in the SPY, actually. Okay, so we're gonna pretty much leave it there. We'll check Bitcoin real quick. 64,000. Boy, really shot up. Flagging very cleanly here. Remember, price only flags or trends. So we are in flagging. You can see very clean flagging right here. We're getting close to an apex. Very cleanly, you can count it moving up to this level, moving A, B, C, D, and then possibly E. We could get a shakeout range kind of in this area, so be aware. Could get very volatile here. We do have an upward channel, which looks like it's taking place across here, moving higher, and Control C, Control V, and place the upward channel here. So again, Bitcoin could easily roll into this upward channel mode, staying in this mode, or could attempt to establish a higher channel. But it looks like we're going to get a pretty solid breakout. Now, if we did get this move over the next 2 or 3 days, this could be a very solid move for gold and for the QQQ. Bitcoin not only acts as a is a moderate correlation to the general U.S. markets, but also as a hedge instrument. So very solid flagging. Remember, price only does two things: it flags or it trends, and it does that always in the attempt of trying to establish new highs or new lows. Okay, we're going to go back here to the SPY 20-minute morning video. Get ready. We're going to have a pretty exciting day, I think. And like I'm going to warn you, you've got to play the trend, play what's in front of you, as my friend says. Okay, that's it for now. Talk to you later.